So at this point, I would like to introduce our first guest speaker this morning, so Panos Prodromides. So Panos is the chair of the Committee of European Audit Oversight Bodies, as well as leading the Cypriot Public Audit Oversight Board. He's a member of the Institute of Certified Public Accountants of Cyprus and the Institute of Chartered Accountants, England and Wales. Panos has also represented Cyprus on numerous subgroups within the CEAOB and is an active member within the International Forum of Independent Audit Regulators, or IFIAR, and we are delighted to welcome him here this morning to discuss the role CEAOB plays within the European audit market. So I'll hand over to Panos now. Thank you.
Good morning, everyone. Thank you, Barry, for the introduction. Just check. Right. Ian, can you make it slightly bigger on this screen? Thank you. So I would like, first of all, to thank IAASA for their kind invitation to be present at this excellent event. Thank you, Kevin. Thank you, Lisa. And as Barry said, my name is Panos Prodromides. I'm the current chair of the CEAOB, which is the audit regulator, and also the Director General of the Cyprus Public Audit Oversight Board. And I will be presenting the CEAOB strategies, developments, and emerging challenges. So the agenda is, first of all, to discuss the CEAOB roles and responsibilities and some current developments and challenges covering the state of the European audit market, EU Audit Regulation Directive reforms, an update regarding the Audit Regulation Directive Task Force, strategy mainly focusing on the collection of audit quality information, and some key recent challenges. So moving, first of all, to the CEAOB's mission and core strategies. So our main mission is that we would like to foster convergence of practice between the European audit regulators in order to make sure that we improve audit quality, because this will enhance the trust in informative, reliable, and independent audit reports. We believe that trust is the cornerstone of well-functioning capital markets. So we have 4 core strategies. The first one is to harmonize the regulatory approaches. You're going to see in the next slide, we have a number of subgroups. We talk between us, we meet physically or virtually. We discuss a lot of inspection approaches, and we also have a common audit inspection methodology called KIME. We share a lot of expertise and experience. As I said, there are the subgroups that we discuss a number of issues, and we try to converge as much as possible. We contribute to the EU policy, so we are in direct communication with the EU Commission, and we issue a number of non-binding guidelines. And we also contribute to policy making via regular dialogue with standard setters, IASPA, IASB, and also EFRAG as well. And we provide a number of comment letters to exposure drafts that they issue. This is the structure of the CEAOB. So I'm the current chair. The vice chair is the EU. We have the consultative group, which is an advisory group to the chair. It comprises 6 countries. IAASA, I'm honored, it's a member of this consultant group. There's another 5 members. So we have Ireland, France, Italy, Romania, Poland, and Germany. And then we have the 27 members plus ESMA. We have the European Banking Authority, IAASA, insurance, 3 EA countries, Liechtenstein, Norway, and Iceland. And then we have Ukraine as an observer. The colleges you see, they are basically groups that discuss with the big 4 firms. So we have a forum of discussion. We discuss a number of findings, and it's a 2-way communication. And then we have the 5 subgroups. We have the inspection subgroup, which comprises of a number of task forces as well, financial services, the KIME, which is the methodology task force, the training. They provide a number of training to the inspectors. The IT, they develop guidelines or papers like artificial intelligence. And audit quality task force and inspection report task force that I will cover in more detail later on. Then we have the international audit standards, the indirect communication with the standard setters, The enforcement subgroup, they discuss administrative sanctions and so on that imposed to audit firms. Market monitoring, they monitor the competition within EU. What is the market concentration of PI audits between Big Four or non-Big Four firms? And the international equivalence and adequacy subgroup, the purpose is mainly to assess the level of supervision in third non-EU audit regulators and if they're equivalent to EU regulatory level. So the state of the European audit market. Now, as Barry said, the Commission is working to simplify the rules under CSRD under the Omnibus proposal. End of July, the EFRAG, they published revised, simplified exposure drafts, and there was a consultation period which ended end of September. CEAOB has already provided the consultation paper. And the Commission also decided not to adopt standards for sustainability for sustainability assurance for 2026, but we will instead issue targeted assurance guidelines on specific items. The CEAOB is currently working on these targeted assurance guidelines, and hopefully we're going to have something in place next year. Also, there is a revision of the IAASA Code of Ethics to include standards for sustainability reporting alongside the financial reporting. EU Audit Regulation and Directive Reforms discussion. Back in May 2025, I had a meeting with the Commissioner of Financial Services, Maria Luisa Albuquerque, and what we discussed is that it is very important that we strengthen the role of the CEAOB. We believe that an empowered CEAOB will be beneficial because this will mean that we're going to be a level playing field of audit firm supervision across EU. Then a formal letter was sent to the Commissioner based on the work performed by the ART Task Force, which I will present later on what are the main provisions of this ART Task Force. And following that letter that was sent, in September, there was an IAASA conference, and the Commissioner was a keynote speaker. And I would like to highlight some of the messages that she covered during her speech. She said that that they will conclude that the 2014 reform has brought real improvements. Therefore, at this stage, we do not see a compelling case for far-reaching changes to our audit rules. So she said that legislation is not going to be changed much. However, we see an opportunity to do more as regards to the supervision of the audit sector. And then she moved on, she said, audit regulators in the EU do not operate with equal powers or resources. So we have many differences between us. In some countries, regulators can search and seize documents or take witness statements. In others, they can't. So that means in enforcement, there are many differences and powers between the audit regulators. Then she also said that in some cases, a lack of experienced staff has meant fewer inspection of audits, even in critical sectors like banking and insurance. So what she said is that in some EU audit regulators, they don't have the competence to go and review the audit files in relation to the banking sector or insurance sector, and that's a risk. The Commissioner then highlighted that we require strong and consistent supervision. It's essential to build trust. Is what I said in the beginning. Trust is the cornerstone of well-functioning capital markets. So she said that the CEAOB is limited in how much more it can do. It has no legal authority, no budget, and no resources of its own. Its secretariat is provided by the Commission and relies on the resources of its members, who split their time between the CEAOB and their work in the National Oversight Authority. Like myself, I'm like volunteering my time to the CEAOB, but at the same time I'm running the local work, which is makes it very difficult because you're like running two different authorities. The Commission announced that the Commission will publicly consult on different options for strengthening the coherence of the supervision. So we start the consultation process, and based on the outcome from consultation with stakeholders, we will determine what is necessary in this area and what is not. And the keynote is publicly available, so you can refer to the website and read more about it. Now, I'm going to present more about the work of the Audit Regulation Directive Task Force. Kevin was a chair, and thank you, Kevin, for preparing this excellent paper. So this task force was established back in March 2022 plenary. The scope was to identify the issues and the problems, and where possible, assess the impact of these problems and provide or propose improvements. However, I would like to highlight that any recommendation is the decisions of the EU Commission. So the Commission needs to decide based on what we provide, but it's up to them to whatever is going to be implemented or, going forward. Now, the first recommendation is, as the Commissioner said, that we would like to CEAOB to have enhanced powers and resources. That means that we need to have an appropriate structure. Funding is also very important, so the money needs to come from somewhere. And also another proposal is that this enhanced CEAOB should be able to draft and propose regulatory technical standards in areas where the CEAOB has competence that will be binding to the members, and that means that we're going to be a lot more consistent in terms of the scope of our work. Second recommendation is additional resources for national competent authorities. As I said, it has been identified that some national competent authorities do not have adequate resources or maybe funding as well. And the second recommendation is to be able to carry some peer reviews between us. So one national competent authority will be able to make some recommendation to another competent authority in order to recommend some improvements and implement going forward. That will mean that we can adopt best practices between us. The recommendation, single set of EU auditing standards. I mean, the EU, they have the powers to write EU auditing standards. However, they don't do it currently. So maybe the CEAOB could be assigned in a role in the standard adoption process. Obviously, this would mean probably taking the international standards on auditing, making some add-ons or carve-outs, and this could be the EU auditing standards in Europe, and the individual member states could be allowed to, should be allowed rather, to make any additions, but those standards would be the minimum, and that would create a lot of consistency of auditing standards across Europe. The third recommendation is that there is harmonization of EU audit legislation. There are a number of member state options across the regulation. For example, the options on the non-audit services and also the rotation, number of years of rotation and so on. So they have been applied differently in a number of member states. So the suggestion is that ideally is to minimize or completely eliminate these different member state options, and also harmonization of powers available to regulators regarding the legal power to impose sanctions. So in terms of sanctions, to be more consistent between us. Now, since I was elected as a chair, one of our focus is that we would like to collect more data regarding audit quality. So we have established two new task forces. It's the Audit Quality Indicators Task Force that was resolved in the March 2025 plenary, and we created this task force. One example of audit quality indicators is like the number of hours a partner spent on an audit, or the EQCR number of hours, or the number of training hours that at different levels as well. So there are a number of AQIs that we could explore, and it's a phased approach. We will explore the current models that are in place in EU or outside EU, and based on this phased approach, we'll determine the next steps on the findings on these AQIs. So the current task force is already working on this project. And the second task force that was created is the Inspection Report Task Force. At CEAOB, We have a database where all the audit regulators, they upload the findings, like Barry presented, the findings are uploaded, and they're obviously on it's an anonymous basis. We don't report the name of the PI. We just report the capitalization and also the industry, and we map the findings to the IAASA. So based on that information, we will start preparing an inspection report, which is going to collect all the information from all the findings collected across EU, and we'll also explore the grading system. As Barry presented, in Ireland you have a really good grading system. We would like to have, in some countries in the EU, they don't have the grading system, however, so we would like to adopt this grading system because it gives like a snapshot of the audit quality across EU. Moving on to some key recent challenges. Audit market concentration. We have observed that the audit market of PIs is highly concentrated between the big four, and this concentration creates issues of resilience, competition, and choice, so there is limited choice. We have observed that the mid-tier firms, they have some barriers in entering the PI segment. Mainly the barriers require investment in technology, and maybe they don't have the capital or maybe the expertise in terms of some industries like the banking sector. And obviously this concentration affects the audit quality and stability because if there is reduced competition, there is a limited choice for audit committees to select an auditor, and also lowers the incentives for innovation. There are some discussion at European and national levels, which in order to strengthen the market resilience and also support the mid-tier firms, some jurisdictions are taking actions in order to raise the ability of these mid-tier firms to enter the PI market. However, we want to ensure that this greater diversity is well balanced with high quality audit delivery. Technological developments and AI, we have seen is very high in your agenda. So data analytics and artificial intelligence are definitely reshaping how audits are performed. Now, the large firms are already relying on automated tools, for example, journal entry testing, risk assessment, or even substantive procedures. However, there are concerns. There are risks on bias, over-reliance on these tools, data privacy, and also accountability. So as regulators, we would like to stress the importance that the auditors maintain professional judgment and professional skepticism. They have to be adequately trained regarding these tools, and also there has to be an element of oversight, as well as governance frameworks on these AI tools. At EU level, we have the EU AI Act, which provides some principles for transparency, safety, and human oversight. And firms and regulators, we have to build expertise and also be trained adequately in order to make sure that we use them in the appropriate manner. The next issue is on private equity. We have observed there is a lot of private equity investment going on in the audit sector. One of the main drivers is that there is capital for technology or international expansion. However, this raises some concerns on independence. For example, if the private equity firm has a number of investments of other companies, and those companies are audited by the firm that the private equity has invested, then there are independence issues, conflicts of interest. Audit quality issues, if the tone at the top is to increase the profits and the audit quality is like second or third in the agenda, then there are risks and some governance issues. EFR, Kevin is currently the chair, there was a thematic report that highlighted the risk where the commercial pressures may conflict with the professional judgment and long-term quality objectives. And finally, maybe we require at EU level some safeguards. Basically, we would like to have greater transparency on the ownership structure and also on the governance structure, and also maybe we need to reassess some of the independence rules for private equity
backed models. Now, we're going to have some questions. When the slides will be distributed to you fairly soon, there is additional information, including the slides regarding mainly the work of the subgroups. So, Kevin.
Great.
Yeah.
Okay, very good. Thank you, Panos. I'll take that clicker off you now so I can figure out what I'm doing. So first of all, thank you very much. You're a very busy man, and thank you for giving us of your time and coming over here in person. A lot of things you covered there. I just want to mention again, not just Panos' slides, but all of the slides from this morning are going to be distributed to everybody. So it's not a writing competition. You're getting a lot of information. Other point, the Slido question is open all the time. It comes off from time to time as other questions come up, but the morning Slido question is always there. So we encourage you to answer that as well. So we have our roving mics. Very happy to take any questions from anybody who's here in the room. For Panos, as I said, it's a unique opportunity to get somebody of his stature to come here. But we'll also have the questions on Slido as well, which are up on the screen behind me. So I'll leave the floor open. I will keep an eye out for anybody who wants to raise their hand, and we'll take questions there. And we have a question at the back here on the right. Thank you. Yes, just in front of you.
The pies, the auditing of the pies, and having firms to do that. Just wonder, from the other perspective, if the perspective of the company is taken into consideration. It's a very real issue where there is such concentration that the audit firms don't want to supply the service. And then, you know, it leaves firms in a situation where they face potential compliance issues with their own auditing requirements when they literally struggle to find a firm to do it. And so I just wondered if that perspective is taken into account in considering, you know, the pie environment.
So it's about, I think, the fact that market concentration can actually make it quite difficult for companies to find an auditor, and, you know, both cleansing themselves and auditor rotation, and whether at a European level there's consideration given of that.
Yeah, I think you're. I mean, what you're saying is that like synergies when the same auditor audits the same firm year after year. Is that what you're referring? Yeah.
And they're required to change. Then how can that work if the market's very concentrated? Is that a policy issue from a European point of view?
Yeah, I think what we are okay. We understand that maybe the quality year after year increases if this is the same firm, but then there are issues of like familiarity or over dependence, and maybe sometimes we have seen that they can overlook maybe some strange, let's say, accounting treatments if they are the same auditor year after year. So in order to and also changing the auditor, having a fresh pair of eyes and completely independent, you are making sure that there's a new start, and maybe they can. You are making sure that independence is completely maintained at a higher level. But I agree with you, it's not, you know, black and white. There are pros and cons, and that's why in some jurisdictions they allow the same firm to be the auditor for 20 years, which is a long time. While in other jurisdictions they are only allowed up to 10, and so there is no right or wrong answer. I think the most important is the mindset of ethics of the audit firm. If they keep it at a very high level, then having the same auditor for many years, it shouldn't be an issue.
Yeah. I mean, I would say, and building on what Panos said, that it's important the commission, when they run their consultation, that they hear from people like you who have these sorts of issues, so that they get those different perspectives. No, thank you for that. Any other questions? I see there's a question up on the board. I should say Panos he may be head of CEAOB, he doesn't write all the laws, but should there be a central audit registration and supervision body in the EU, and would that be more efficient and lead to greater consistency? I mean, it's come up from time to time. I don't know if you have any of your own views in relation to that, Panos.
I think yes, but in order to do that, you need the resources and the funding. And if we don't have the resources and funding, that would be difficult. And maybe, again, there are so many differences between the EU regulators. Maybe it would be very difficult to implement at this stage. Maybe it could be something in the future to have in mind.
Yeah, I mean, when we have talked about it, we've talked about the fact that there are a lot of differences at a national level. And even if you look at a firm, the firms are set up at national level as well. So, there are difficulties, I suppose. There are things that work well, because we were talking about this last night. There are things that work well at EU level and other things that work well at national level. Yeah. So it's... Any other questions from the room? What would EU safeguards on private equity look like? I'm glad you're getting these questions, Panos. What would EU safeguards on private equity look like? Any ideas?
Right. Okay. Maybe it would be basically on the governance and the shareholding. I mean, and also maybe have some risk assessment and maybe monitor them more on a frequent basis, basically just to make sure that the audit quality is not affected, given that these audit firms are being backed up by the private equity model. Yeah.
I think, again, a lot of it probably comes down to regulation as much as it does legislation. Yeah. And actually, that's another good point around the difference between different countries, because again, as you know, some countries like Ireland, this is like a really live issue, but for some of the other CEAOB members, they don't hear a lot about it because it's not happening.
Yeah, basically at CEAOB we'll continuously monitor this topic, and we have it on the agenda. We have 3 plenary years, and we have it and we discuss it between us just to make sure that if something goes wrong, that we take action quickly, and the Commission is also appropriately informed. Yeah.
Again, I'll keep an eye out in case there's any hands that go up in the room. The next question that we have on Slido relates to the fact that the Commission have decided not to adopt IAASA 5000, and maybe your view on why the Commission has decided not to formally adopt that, but to go down the guidelines route that you talked about.
Yeah. I think, obviously, locally there is some flexibility to adopt the IAASA 5000. I think it's to give some more time to see how the omnibus would also implement and what the ESRS will look like, because currently there is a lot of changes going on. So it gives more flexibility. Maybe in the future the Commission will decide to adopt the IAASA 5000.
Okay. And we have a hand at the back of the room, so I'll take a question from the room, and we might get one more in after that.
If I could take 2 questions. One is, there is a lot of greenwashing that happens in the sustainability reporting. What exactly is the way forward to prevent that? Because it's becoming more an art than science in ESRC, and I, for one, recently got qualified to be signing off on ESRC, CSRD reporting as an auditor. And I can put my hand up and say it's still quite an art and not a science. Not in terms of accounting. I can audit a set of accounts and I know it's science and not art. So that's my first question.
Okay, I think we have to take into account that this was the first year that assurance was provided. And what I would like to request from the audit firms is that they have greenwashing is one of the significant risks, to make sure that they try to tackle it. I don't have any information of or inspection results so far, so I cannot really comment of what work they do or if they identified greenwashing or not. But what I can say is that we will definitely continuously monitor the results of our inspections. So if the audit firms do not include greenwashing as part of their risks, we will make sure that they include it and see the results of their audit work and also our inspection results as regulators.
Yeah, just a follow-up on that is, would there be something that is consistent across different sets of accounts? makes it comparable. You can identify when where something is changing dramatically. But the way, I know it's 2024 sets of accounts and sustainability reporting. Each company, even though they work in the same domain, they've looked at it from a total different perspective. And their double materiality assessment then is not consistent. So perhaps a guidance for consistency within certain sectors might make reports comparable. You can then say, okay, who's greenwashing and who's not?
Yeah, very good recommendations. We will take into account. I think it's for the CEAOB.
Yeah, and I mean, from a corporate reporting point of view, it's probably as much ESMA as it would be CEAOB. And then if I reflect actually on what my colleague Morris said, which is everybody was in isolation in year one from a reporting point of view, and they'll have a chance to look at each other now, and maybe year two might be different. So we've run well over time, which I suspected we would, having Panos in the room. So we'll bring this to a conclusion now, and I'll hand over to Lisa. But in the meantime, can you all please give a round of applause to our guest, Panos Prodromides.
Morning, everyone. So thank you, Thomas, for joining us here today. So maybe do you want to start by introducing yourself and telling us a bit about your role in Ryanair?
Yeah, so I'm Tom Fowler. I'm Chief Sustainability Officer in Ryanair. I've been in Ryanair 21 years, so I've grown up at the place. Obviously, finance and accounting is my background, and probably where I ended up in the sustainability piece was I done all the fuel procurement for the business, and obviously sustainable aviation fuel is one of the biggest pathways of decarbonisation in the business. So I ended up moving into the sustainability role in 2019, and obviously been involved in the CSRD process with the accounting team for the last number of years. So yeah, it's definitely been an interesting time, I would say.
Yeah, definitely an interesting journey. So speaking of the CSRD, Ryanair produced the first CSRD report in 2025. So how did that go?
Yeah, look, it was a challenge. Like, there's no point in saying it any other way. Like, it was very much uncertainty. From producing what was expected to be produced, what the standards were meant to be. No one seemed to know. Everyone had different opinions, and I think that's the one thing CSRD has probably thrown up in the financial statements. It's grey. Accounting used to be black or white. Now we've got grey. And how we get comfort over the reporting side of things. I think what we learned very quickly was if the DMA was wrong, we were going to be in big trouble. So we obviously got outside help on our DMA to make sure the process we followed was correct. I know Connor's in the room up there, so he's had many a phone call with me on this. We followed a very strict process, documentation and backup and all the different bits and pieces that we had to go through in the DMA process. And then obviously, once the DMA was complete, I see our auditor is in the room, so we had to go through the audit process with the auditor then and go through that comfort. But like one thing I would say is it was the unknown for both of us, like both the auditor and ourselves, and even anyone that gave us some advice on it. We were working in a little bit in the dark as to, look, we think this is right and we expect this to be right, and we followed the guidelines. I know Morris kind of said seeing the wood from the trees earlier on. I think that's the way it has been, because no one wanted to get it wrong in year one, and we just followed the law. Yeah. That was really much what we done throughout the whole process. And as our CFO told me, Tom, I brought you in to be sustainable, and you've added 160 pages to the annual report, and the document is now this size. It's definitely been a challenge, like I would say, even from going through the process with the auditors. Look, it was new for them, even going through, we were so used to Sarbanes-Oxley and Ryanair process and controls. We thought we had all of this in place, and then, then we had to go through a whole new thing. And I know it's a joke between us and our auditor, limited assurance. It felt like more than even reasonable assurance we went through on every sentence that was in the document. But look, understandably so, given the nervousness on year one, that to get it right was important. And look, we got there. I think we got there, whether it be long nights and stressful nights. And when I hear Maurice ask the question, many people read them in detail, 0, it makes you feel good about what you've done for 9 months of the year. I can tell you that. It's definitely enlightened as to where we're going. But look, I just think it's brought a lot of complexity that wasn't needed in the annual report, if I'm being honest. You know, it's non-financial. Like, you know, the core part of the annual report is financial reporting, and where it even sits, like, it's just really sat in now an area that like, you know, I think if ESG is core at businesses, it's quite clearly shown. Like, and I can only talk about that from our side. Like I sit on the audit committee, I report to the board every quarter. There's regular updates already given investors. I've had more investor meetings on ESG, I'd say, in the last 3 years than I have on financial reporting. It had become a topic area, and businesses should have been able to manage it. But look, we sit where we sit.
Great, thank you. And so you mentioned, and Conor is your auditor here in the room?
No, Conor was the advisor, PwC the auditor.
Okay. So I suppose in terms of that assurance process, so one perspective or possibility in Ireland is that you don't have to use your statutory auditor. Yeah. Maybe could you talk a little bit about Ryanair's decision in that regard, and then just how the assurance process was?
Yeah, look, I think look, we made the decision earlier. It was easier. It was sitting in the director's report. There's no point in having 2 auditors reviewing the director's report. It adds more questions probably for the financial audit. So we just made the decision with the board and the audit committee that the easiest process was to have our auditor do it. They were going to be on site reviewing the financial numbers. There is some links between the numbers, so it made life easier. Like, look, I think the process went as well as it could. Like, I think we all expected it to be pain in year 1. I think it was that, and I'm sure the auditor would say the same about us, that we were painful at times. But, you know, look, in fairness to PwC, they had a lot of people at this, you know, to make sure that the information was right. Like, I think the CSRD audit team was bigger than the audit team this year, but yeah, look, it worked. Like, you know, we had a good process from day one. Like, we kind of started the CSRD process with the auditor probably at the middle to the end of 24, and we had regular reviews throughout the year to make sure, look, at this is where we're sitting, this is how it's looking, have you got any issues, have you not? And then we kind of started producing draft reports without numbers and how it linked, like, you know, through the middle of last year. So, like, I'd say it was a 9-month process on the sustainability statement last year to make sure that we were all comfortable and that the auditor could sign it off with no issues, and that we met everything that the guidelines have set out, all even big set of guidelines. But look, we met it. Like,
yeah, I suppose that's a good point maybe for companies who aren't in scope right now but are going to be in scope in a couple of years. Early engagement with your auditors. Yeah, look, if you're asking me about lessons learned, early engagement with your auditor, I would say very important you get the DMA right, get some consultation on it. It's really important, because if you get it wrong and you're halfway through your sustainability statement and the auditor questions something, it's very hard to turn back at that stage. So, like, I think we learned that early doors as a Wave 1 reporter. I'm sure if you talk to any other Wave 1 reporter, we all kind of did the same thing. We all spoke to each other throughout the process, and making sure we got it right. I think I mentioned that grey, and that was probably one of the bigger concerns. Like, Ireland was one of the first adopters of CSRD. Like, if I look at aviation, not many other airlines had to report CSRD in 2024 because the countries hadn't adopted the guideline. And that's what I meant about grey. You're comparing yourself to someone else's DMA in a completely different industry. I'm worrying, are you doing it right or are you doing it wrong? But I think you just have to go and get comfort over your DMA that you've done it right and you're comfortable what's material for the business, and that's how you're going to report. Because there is not, I don't believe there's going to be one size fits all. I don't think we'll ever get to like a financial statements process, because every company views risks differently, and that's part of what the materiality assessment throws out. So yeah, and I suppose they're very key judgments in that DMA process. I don't know if we explained that acronym just in case anyone's
double materiality assessment. Yeah.
Sorry.
So you're looking at what's material from the company side and the stakeholder side. So there's a lot of engagement with your stakeholders as well on this, and seeing what their views are. Because I suppose for so long we've looked at materiality from the company side, and we assume stakeholders have the same thought of what's material. Sometimes that doesn't work out that way.
Yeah, and there's additional stakeholders as well in relation to
the silent stakeholders, as I learned very quickly.
Great. So I suppose then we saw earlier that when Morris put up his slide, that not many people have read reports in detail, which I suppose links into a question. And we saw in the keywords, too long, too complex. What feedback have you gotten from your investors?
Yeah, look, it's been mixed, I would say. I'd say the bigger investors that have teams to review the documents have reviewed the documents. The smaller investors have asked me, where's your sustainability report gone off your website? And we've explained it's in the document. Oh, I have to go find it, do I? Why is it sitting in there? And you're explaining it. I think people, to what Morris said, I think people are finding it difficult on the flow. Like, you are trying to create a flow for the ERSs, IROs under the ERSs and the different bits and pieces, but probably where it sits is a challenge because it's in the middle of the director's statement. It's not sitting at the end of the document, and that's probably been a challenge because you start reading the director's statement and all of a sudden you're into the middle of a sustainability statement, then into a REM report. It just doesn't flow, and that's probably created a challenge, I would say. I said some people that have read it have had questions. Interestingly, I didn't think anyone would read it, and we had a question 2 days after the annual report was published. But I would say the feedback has been very mixed. Like, it's too hard to read now. We can't just take the core data. We have to go trail through where you're talking about what you've done in the year or different bits and pieces, whereas we used to maybe have it slightly different in our sustainability document that we had before. But I think Morris summed it up pretty well earlier on. It's not the norm at the moment. It's something new, and we have to get used to it. And I think in a couple of years' time, if I was sitting here, I'd have a very different answer as to how investors see about it. It might become easier to read and easier to understand as maybe commonality comes, as Morris said. There's some type of standard. We're not there today, and everyone's just trying to report it in the style of the annual report that they do, and maybe that changes over time.
Yeah, and I suppose the ESRSs, so the reporting standards, are very prescriptive, which drives that complexity and the length of reports, but it makes it much harder, I suppose, to tell your story.
Yeah.
And so we've seen companies, they'll have the CSRD report, which is quite long, but then separately there might be a sort of a shorter, maybe slightly more user-friendly report on the side. But I know with Ryanair you made a different decision in that regard. Do you want
to we took the decision, and again, through engaging with the auditors, how do we produce the sustainability doc in its form, risks of inconsistencies. They probably would have had to review the document and do assurance on it as well, and we can understand that we took the decision. We're not doing the sustainability doc this year. The sustainability statement is our sustainability reporting, and that was it. All we've done is we've kind of taken the report out as a separate section to sit on the website, but we haven't done the colours and pictures and everything else that we would have done before on sustainability reporting with nice buzzwords in the pages. You come back to risk management. You just didn't want risk of inconsistencies where it created problems. I know some firms have decided to continue doing their statement. I think we took the view an extra 160 pages was enough. Thanks. Handing them another 60 or 70 pages to review at that time just didn't make sense. And we took the decision with the board and the management team in Ryanair that we'll do the sustainability statement, and then we'll just continue what we're doing in regards of engaging with investors on the ESG strategy as they see fit.
Yeah. And I know when we were talking as well, Tom, preparing for today, you mentioned ESG ratings and rating agencies and with them. Do you want to talk about that?
Yeah, I suppose if I go back to 2018, when ESG was taken off, there was a lot of focus from investors on ESG rating agencies, whether it be Sustainalytics, MSCI, S&P, the ratings of businesses, and kind of the feedback back then was that it's very hard to find it within the annual report. The information trolling through hundreds of pages is difficult, and unless you point it to us, it's very hard for us to improve your score. And that's why we kind of went down the sustainability report route. It was a document with all the key information that they needed for that, because obviously with SFRD, when that came in from an investor point of view, they had to show they were investing in sustainable companies. And interestingly, this year it's gone now the opposite way. It's back in the annual report, and we have to push the ESG rating agencies and literally point them now to every single page where the information is, because they're not going to read the annual report. Like, they're just not going to do that. And it's obviously still as important from an investment point of view as in our business, particularly, that we keep those ratings up, because if we don't, people won't be able to invest in the business. And that's just another risk, whether from the report and financial and non-financial report side, but from the investment side, that we have to manage, and we're doing it at the moment. So we've just gone through the first cycle, one of the rating agencies, and thankfully we've kept our rating by pointing them in the direction of where everything is in the document. So
great. And I suppose it's hard to talk about sustainability right now without talking about the O word. So what are your thoughts, I suppose, on the omnibus and what's coming?
Yeah, look, I think we'd welcome it. I think, look, it's quite, I think everyone's kind of said this today, there's a lot of data. Reducing the data to core data would be a way to go to make the reporting easier. I just hope that we don't fall where we fell the last time, where the enactment is slow across the board. We see it come in unilaterally, so it works, for all businesses, because obviously, particularly us in Ireland, from an aviation perspective, we're probably the only one that reports an annual report of the size and scale. So obviously, trying to compare to peers and make sure there's nothing we're fundamentally missing. If they don't have to do it, it's a challenge. Obviously, and again, look, it takes some of the risk off the table regards of assurance. Like, look, particularly on the reasonable assurance, as I said, if this was limited assurance this year, I'd hate to see what reasonable assurance will be in years to come. Like, I'll definitely have aged a lot more from the process.
Okay, I think that was all the questions we had planned. So happy to take any questions from the room, and of course on Slido as well. Anyone in the room? And down the front here. Nicky's coming to you with the mic now, if you can just give us 1 second.
Hi, Thomas. One of the interesting areas as an accountant is talking to your friends who are engineers or technicians, and they're going, this is crazy what we have to report as an audit cycle. How did you find the challenge internally of bringing people along that maybe weren't part of the audit process through the financial statement audit?
Yeah, like, I come back to the challenge for us probably wasn't that difficult to say, because we're SOX compliant as a business. So from process controls, from the HR side and the different bits and pieces that we were doing, they kind of had an idea if we had controls on processes. Like, again, I'd say they looked at me when we kind of asked questions on, can we look at something this way? Like, regards of aircraft, because it helps with scope 1 emissions. Well, what are you talking about? There's a list as long as our arm here to fix things. I wouldn't say it was the CSRD side they've all questioned. It was probably more when we're creating the strategy for decarbonisation and then what we have to report on in the year. That was probably more of a question. Why are you asking me this? And then explain to them we're putting it in the report, and we need to make sure we've all the information and different bits and pieces. It was fine. Like, I think our HR team on the social side have been well aware. From the SOX side, they go through process controls, because obviously payroll has financial implications. So that kind of worked, and governance is kind of governance as it was through the process. And obviously we're kind of lucky in Ryanair, given aviation such a regulated industry. There's nothing new to us on regulation. We have to, every document, every piece, like even changing a washer on a plane, the amount of documents that have to be submitted is just, it's off the wall. Like, so, from a safety perspective, and that's important. So look, we're used to it as a business, but I don't think we were expecting the level of the additional pages, I suppose. Like, when you look at it, like, you're coming back to trying to keep the annual report as user-friendly as possible. Like, to Maurice's point about having that summary page, I wouldn't even know how, Maurice, you start a summary page on CSRD, how you could fit it on one page without someone telling you you've missed something. maybe when the omnibus comes in, that's an option, but I don't see it in the short term. So,
thanks.
Great. Anyone else in the room? Quite a few on Slido here. So I heard some giggles in the room when one went up, which is, what does Michael O'Leary think the sustainability statement is useful? Laugh that one, get it out of the way.
Look, Michael's Michael. Michael do what's right for the business. Like, look, Michael may not be heavily involved in it. Like, he's at the board level. He hears the information we give. Like, if I asked, he took part in the questionnaire. That was interesting. When we were explaining to him what this question meant and what that question meant. No, look, I think what Michael says, Michael would say he knows we have to report it, but I think the level of reporting we're doing he thinks is ridiculous. Like, as in like 160 pages for what? Like, who's going to read it? To the point, tomorrow's his first question today, who's going to read this? This room here, who's meant to read it, no one's read them in detail. It becomes to the question, who's going to read this and what does it achieve? Ultimately, no one minds doing reporting if it achieves something. At the moment, it's not clear even to me, and I'm sure if you asked the auditors, it's not clear to them what we're achieving with this at the moment. And as that evolves, it might get better.
Yeah.
But like Michael has been all on board on this. I know he has his own, he talks publicly, and so that's creating media attention.
And actually, you just mentioned, I suppose, omnibus and what changes might come. So one question is, what might change with the omnibus, do you think, for Ryanair?
Look, obviously, less data points is a big part. I think, look, staying as reasonable insurance, like I know I joked about it, but I think, look, in fairness to the auditors, we're all through year one now. We have a sense of what's expected. I think, look, reasonable insurance is not a bad way to go on this, and hopefully it just becomes a normal process now, and that will work better. Like I know, like, in fairness to the auditors, but on both sides they did a pretty good job of getting through this process pretty well. And I don't think people see that side of it, because a lot goes into it from the audit firms on this. Yeah. Like, as I said, I'm 20 years in Ryanair. The financial audit team, from an auditor perspective, was probably 6 or 7 people. Thinking PwC had about 9 people on CSRD this year alone. So that will tell you the resources they put behind this to make sure it was right and that it was important. So
yeah, and I think that would mirror what we've seen in our inspections. I suppose a lot of resources in there, and year one was always going to be more onerous. I suppose getting under the skin of those key judgments like the double materiality. Anyone else in the room? Okay, next one then is about, again, questions from the investor community. Was there much engagement, much questions, and if so, which areas were of most interest? I know we touched on it a little bit already.
Yeah, there's lots of engagement. Obviously, the environmental is the biggest engagement, given I don't shy away from the fact that aviation is a hard-to-abate sector. We have got emissions. There's only so much airlines can do on this, which Ryanair is doing by investing significant money in the latest technology aircraft. We always get lots of questions of this, like, what can we do to scale up sustainable aviation fuel? Like, the environment from a CSRD perspective is the biggest focus. I think the social side, yes, a few years ago, Ryanair probably would have had its own issues on that side of things. But I think everyone's beginning to realise the business has changed over the last number of years. We're a heavily regulated industry regards to health and safety. There's no issues on that side because it's so regulated. As I said, everything is reported as it is on that side. So there's less questions on the social and the governance. Everything will be on environmental and what we're doing. They're the biggest questions that we get. Like,
great. Okay. The next question is, how was the value chain engagement? Any difficulties there?
Yeah, look, I would say there was some difficulties. Like, given we went out to the value chain, I would say some were more receptive. I'd say companies that we deal with were more receptive than, we done it as part of the stakeholders, and we issued the survey to customers. Like, it's amazing the responses we got, the varied responses you get, because some people may have known what CSRD was or what the questionnaire was entailed, and other people just basically had a rant over a flight or something on it. Like, it was so far-fetched. They weren't even answering the questions. It was just and having to go on, like, when you think about it, and it was probably one of the biggest questions we did take off our auditor was, we carry 200 million people, and that sample size, but like can't do 10%, like I'll be here till next Christmas doing it, you know. So we had to picked a select cohort, like we've got a customer panel, and then we picked a select cohort of passengers who we thought would engage based on what the insights team in our business look at. They look at engagement on social media and all the different bits and pieces. So like, look, I think that was probably the biggest challenge, was from that type of stakeholder. Obviously, regulators, you know, they don't tend to respond very quickly. They don't like having their name on a lot of things. That was probably a little bit more challenging, but we got some over the line. But I would say the bigger stakeholders in the business, the ones that we would think were core to this, answered quite quickly, because they were probably going through the process themselves, some of the major companies.
Yeah. And even mapping your value chain, I suppose, is tricky.
Yeah, it's a challenge. It was a challenge, like, you know, and that's where we had obviously some help on that, making sure we mapped it correctly. Because again, I reckon for anyone that hasn't done it yet, I would say, look, make sure you get the DMA right and all the mapping right on that, because if you don't, you're going to end up just pulling your hair out and going backwards very quickly. So
okay, I think we have time for another one or two. One is back there.
I suppose a metric like earnings per share or EBITDA is very much a science. What if for every dollar earned, how much carbon is spent is a metric right across the board? Would that be something that you would like to report on?
No. I look, again, you come back to what is Ryanair? Ryanair is a low-cost airline. The average fare is 40 euros compared to the competition who make 120 euros. Like, you know, that. My metric and the metric that we've tried to push as an aviation industry is CO2 per passenger kilometre. Because for every passenger that's on the plane, you're making revenue. And if you're emitting less for that seat by having more people fly on the plane, that's the metric. I don't think you can put financial numbers against emission numbers, because it just doesn't make sense. Like, you know, because, you know, someone could be only fly long haul flights and charge 2,000 euros a flight. Of course, their emission per dollar is going to be cheaper than our 40 euro fare. But I think we have to get, like, and again, I think there was a question earlier on about greenwashing and everything else. Like, I don't think as an industry we're not shying away from the absolute emissions will probably rise over the next 5 or 6 years, and the metric we should be looking at is the emission per seat on the aircraft. Is that improving? Because ultimately, the more people that fly and there's less emissions on their seat, the better than flying maybe an alternative, like, you know. Because, like, look, I come back to, and again, not to get specific on the industry, a hard to abate sector, you can't take SAF at the moment. It's not there. There's only so much you can do on planes under regulation. You can only buy so many aircraft and deliver them. As the company grows, and travel is an important part, and this probably isn't the forum for ESG, but social is just as important with connectivity and everything else, that we can't shy away from that. That, look, there is some elements that will take a bit of time, but the social side and the aspect on businesses and countries and that is important as well, and we need to just round the circle on that a little bit. All right.
Great. Maybe we'll squeeze one last one in, which is, how did the audit committee engage with the CSRD reporting process? Very
well. We're lucky that our chair of our audit committee went through CSRD with his company as well. So it was very engaging. Like, I think we're very lucky in Ryanair that our audit committee in general are very engaging on the matters. They work through. They ask questions. They don't shy away from asking questions and asking us hard questions. Again, as I said, maybe hindsight is a wonderful thing. You're better to be lucky than good. Me sitting on the audit committee and reporting every quarter for the last 2 years on CSRD made life a little bit easier. And then even reporting to the board, that our board kind of knew what was coming. It wasn't a shock to them in the middle of last year when we were handing them draft one of the statement. It was something we had worked through, probably, I said, since 2024, getting ready for that report, end of 23. It could have been end 23 into 24 into the reporting cycle for this year.
Right. So again, I suppose another key message there, that if your company is going to be in scope in the future, start early.
Yeah, look, I definitely would recommend starting early. Engage with your audit committee, engage with your auditor in particular. It's very important. You don't want to sit there thinking you're all aligned and then you get to 6 weeks out and you're not aligned. You'll definitely have sleepless nights then.
Yeah. Great. Well, thank you very much, Tom.
No
Thank you
problem.
for joining us.
Thanks, Chris.